Good morning, and we usually always bring you market updates, but we've had a lot of questions about crop insurance here recently, and so I wanted to bring Craig in here for a midweek webinar. And the thing is we do have these spring insurance prices set with corn at 466, soybeans at 1155, and spring wheat at 685. And before I get to Craig in here on the insurance side of it, I got to tell you the number one question we always get right now in the office is, will corn bounce? And our response always is yes, of course it'll bounce. The biggest question is how much. And we've always talked about a 20 to 40 cent rally in the corn market. But now, when we get over to the crop insurance side of it, what I want to know from Craig is, what's the most popular question you're getting from producers right now?
The most popular question that I'm asking about visiting producers right now would be, what level should I go at? I mean, historically, we've had a lot of our customers go between the 75 and 80%. And a lot of customers, are looking for ways to save money this year with cost being up and the price of corn being down. The biggest thing I always tell them is you need to know what your cost of production is. If you have some risk averse and you're pretty good sound financially, we're going lower levels, between 70 and 75. If you have more risk on the board, we're recommending them to go to 80%.
No, the other thing with the crop insurance side of it, besides the basic policy, it seems like there's a lot of different add-ons out there, and I know a lot of those are market related, and a lot of times you're better off just marketing the grain than looking at some of these other insurance products. But on these add-ons, is there anything that you particularly like or you advise producers to consider?
When it comes to the revenue side of it, we've looked into a lot of these add-on programs. A lot of them are just way too expensive as of right now. I mean, when I look at it from an agent side, selling all these high policies and high dollar policies, they add up. I mean, that brings in a lot more premium, which brings in a lot more commission to our office. I'm like, man, we should sell a lot more of these. But, if I'm looking in the mirror saying, what would I do myself? From the add-ons, the only add-ons I'd really look into would be hail insurance, of course, which a lot of you probably have already, especially if you're optional enterprise units. The only other thing I would look into maybe is the replant option. Right now on the replant option with your MPCI program, you'd only get about $35 to $37 of replant coverage if you have to replant. I mean, most states have an extra replant option where you get an extra $50 to $100 of coverage on replant, and it's pretty reasonable in most areas. Especially for these guys who are pushing the envelope to planting early, I think that's a really good thing. Some people should look into.
That's interesting that way, because a lot of the things I always see or come across my desk is all price related when it comes to these programs, and probably one of the more frustrating things that I see is that these insurance agents, or even you got the university extension out there, they're selling or they're promoting insurance in here, that it's actually giving you a price floor, and I'm not disagreeing, that it is a price floor in the market when you look at this total revenue coverage. But just from a simple standpoint, if you have corn at this 466 and you're looking at 80% coverage, your price floor is really not till you get down to the 370 to 380 area. You've got these futures at 460. That's where I think cash selling grain ahead makes a lot more sense than sitting here and looking at these other add-on programs. The other thing too is producers right now are all gearing up on how are we going to raise more, not raise less. Well, if your average yield it jumps 10% above your APH, when you're looking at an 80% insurance policy, your price floor actually drops down into the 340 area, which is more than $1 below the market. So I just think it's kind of a misconception out there right now that this insurance program is really that you got to market your crop. Bottom line for us, in order for guys to get paid, they got to haul the grain to town and they got to price it out. Simple forward contracts can go a long ways in helping guys manage their risk. Is there anything else that you want to add in here and what's your concerns with on the crop insurance?
No, it's just, if the biggest thing, if you have any questions, on what you should do or look into doing, don't be afraid to contact us. We'd be more than happy to walk you through some of the stuff that we're seeing right now. But, to me is just don't over insure. I mean, you can insure yourself broke if you want. And, if you start getting these costs up to 50 to 75, $100 an acre, I mean, that takes a lot of bushels to get that paid back. I mean, if you look at just today's prices, that's 20 to 25 bushels of corn you have to produce just to pay your insurance premium. And, I just think the best thing to do is put some insurance on there, and go out and do what you do best as firemen. Have this insurance in place if you have a disaster, and just get a good marketing plan in place and start forward contracting and selling some grain and raise a good crop.
Well, that sounds great. And again, I encourage you guys, if you have any questions, on the insurance, reach out to Craig, whether it's in marketing, feel free to call the office. Anything, any other suggestions for upcoming webinars, let us know.